I hope everyone is having a great weekend so far with their families and loved ones. So in today's video I will do a little backtest session, and I'm going to record it so I can share it also with you guys later. In this particular backtest session I will lay the focus on the single candle mitigation entries, right? So it's a concept I'm using a lot lately. In my opinion, it is a pretty good concept to enter for trades. And yeah, without further ado, let's get started, right? So let's first choose a currency pair to go with. I can do like perhaps Euro USD, gold. Well, actually, you know what? GBPJPY. It's one of my least traded currency pairs because honestly I don't like it as much as the others, right? I have my favorite pairs, of course, but yeah, GJ is one of the least favorites, so to say. Okay, so we are here, GJ, 15-minute time frame, right? Now, first things first, let's hide the candles and choose a date, maybe perhaps a month, beginning of the week, beginning of the month. Well, actually, you know, let's choose the October the 10th, okay? So let's get back to October the 10th and let's hit the replay bar right here at the beginning of the Asian session. And now let's have a look, right? Okay, so this is the last candle. Well, actually what I'm going to do, yeah, so looking at this whole block right here. Oh, I don't know why it is there. Let's mark it like that. Okay, so from the 15-minute time frame perspective, we are clearly quite bearish, right? So now that I have a bit of idea of what to look for, I will go down to the 3-minute time frame. Okay, and okay, so let's focus on this part particularly, right? So first thing I am going to do is identify my most recent structure, and let's make this one green, by the way, like that. Okay, so price topped out here and obviously it shot down and it created a lower high, right? And then obviously I am going to backtest starting from here, but I'm just doing a quick analysis of the most recent price action, right? Of the previous day, so I know where to look at when I'm going to backtest today, like the 10th of October, right? Okay, so why did I mark this one as my lower high? Because here, if we look closely, let me just get my inducement like this, right? So if you look here, it's like this candle here, right? So market did like move so, broke this low, right? Left some inducement here, and then this move here confirmed our lower low. Why? Because the liquidity was taking out, right? And if you don't know what I mean with this, I suggest you look in my previous videos, like liquidity, the difference between inducement and engineered liquidity. But yeah, that's not today's topic, so I will not go too much into the details of that. So lower high, lower low, and this move here confirms our lower low because of the liquidity was taking out. And then what do we see? We have a valid break of structure, right? So let's mark this one as a break of structure. Okay, now up to the next move. Immediately what I spot here is again like inducement, right? Because of this move. Let me draw it out for you guys. Pencil, right? So okay, and this low was taking out, so oh, pardon me, I want too much, right? So this is our inducement, and what happened after that? This was our most recent lower high after the inducement was taking out. So this low is now validated as a low in our mechanical structure, right? And if this low is breached or broken out of, right, that will confirm also our break of structure. And as we can see here, that indeed happened. So let me mark this quickly up like that, right? Okay, now that is our break of structure. And if we look structure wise, what happens here? Because of the break of structure here, our most, I believe there is a minimum inducement there that was taking out. So if I had to look for an inducement, I would say this here, right? Because like this minor inducement here was taking out, so our next move would be something like this, right? After this break of structure. Okay, so that is our inducement, and now price is taking out the inducement, and it's probably like mitigated something here like that, right? And now from the looks of it, it goes to the downside. But if we look here, right, there was some liquidity sweep, so I would be careful about placing shorts just yet, because price may go bouncy bounce from that area, right? So but what I do notice, look at this wick here. I find this wick very interesting, so let's mark that one up like that. Okay, why do I find this wick so interesting? Because if I quickly zoom in like that, if you look close, you see the liquidity here from the previous candle was taking out. And not only that, if we look at this side, copy, yeah, look what happened here, right? So after this huge wick, which is our lower high, right, the doji candle was taken out by this dragonfly doji. Okay, so let me remove this one, and if you look closely, that wick got mitigated immediately after the candle closed here. So this right here these 3 candles, right? This is what I call the SCM, or single candle mitigation, and I will base my entries today during backtesting on that concept, right? So this one is now mitigated by this candle, right? Okay, this one, however, has a huge imbalance, like that, something, right? Okay, so I would focus definitely on that candle wick there, if not as a entry, perhaps for a target area, right? So let me zoom out a little bit again until we get the whole picture here, like that. Okay, so now in short what we have is market did something like this, right? And of course there was inducement here taking out, okay? And the same thing happened here. We broke structure. This high confirmed our low here because of the liquidity, and the same goes for here, right? And now we have again broken structure here. Inducement here is taking out, and from the looks of it, the market may or may not go to the downside, but also perhaps after mitigating something, yeah, like this area that I marked after that, you know, because look at here, the liquidity was already taking out. So to me, this is a possibility, but I will use it like Hail Mary, I believe is the correct term. I would focus first on other concepts, okay? So if we now like move a little bit forward to see what price will do. Okay, I see a lot of wicks, by the way. Okay, there's now there's volume introduced, so let's see what will happen. Okay, I believe, let's have a look here. Yeah, if I look very close, if I even go like to the 1 minute time frame, perhaps we can see it a bit better, right? Where is my tool there? Okay, and my mouse here. Okay, so no, I was looking for that one, right? So look what happened here. I think this here may be a smart money trap. Let's label that one red, and SMT, smart money trap, right? Why is that? Because most traders would consider this like a break of structure, right? But they are focusing on internal structure because, again, our major structure is quite, how can I say it, bullish. But there can be a scenario that the price would indeed go up. But why is this a smart money trap? If price should go up, then this is not the place to enter it from, right? Because there was no liquidity taking out at all in this move. So this would be like your inducement point, right? So let's mark it as our inducement. Pardon me. Copy paste. Let's put the icon on the bottom and let's make it a bit smaller like that. Okay, so why is that your inducement? Because, you know, again, this move, right? Okay, that is your inducement. Here are traders manipulated into go long because they see this as a break of structure, right? But basically price is ranging between these levels. So very curious to see what will happen. And if I go now like, let's have a look. So basically here is your candle that triggered some traders already, right, by tapping them in. Okay, so now just out of curiosity, let's see if price goes up. Okay, right. Yeah, so if you didn't put your stop loss to break even, right, you are still in this trade. But if you did move it to like your break-even point, you would be taken out without a loss given, yes, but you would be taken out. So and like I said, to me this looks like a smart money trap because there was no liquidity taken out in this area, and because there's inducement sitting right here, right? So let's look if the price goes further up or not. Okay, that's interesting. Ooh, yeah, that's like a big wig, right? And let's see if it will go up or not. Aye, okay, you see that? Okay, look how the candle ended also. This is the reason why I will wait patiently and sit on my hands, because otherwise you also would have been stopped out here. But now it gets interesting for me to enter. Why? Because look at this, right? Let me quickly zoom in again to this beautiful price action here. Okay, where is my mouse? There. Look at this. Again, what happened here? Let me mark this quickly as a sweep, right? Okay. So not only your candle ended being a pin bar or a dragonfly doji, a hammer candle, however you want to call it. It has many different names, but it doesn't matter how you call it. It does matter that you identify these candles and how to utilize them, right? So you can call it whatever, but and now because because everyone who had entered here, and perhaps even here, because you know they might have saw this here also as a break of structure, right? And they perhaps re-entered from here, right? Or from this one. But as you can see, this was also a manipulation. It went up and then immediately went down to take out everyone. So back to our single candle mitigation entry. Now how I would have entered from this position, because the candle closed there, right? I would put my order like that, and yeah, let's say not beneath this candle. That would be a 2 pip stop loss, but let's say we put it beneath this candle wick, right? Just in case it decides to go to liquidate this one. Okay, so you know what, let's do crazy. Actually, I am going with a 2.3. Okay, I think that's reasonable. And then we could, let me go back to the 3 minute for a second, and then we could like target that point of interest here, right? Because like I showed you guys earlier, the liquidity was taking out. I see a wick, clear wick, right, and with a lot of imbalanced areas here. So I would definitely target that area for a potential 23R, right? So now let's go back to the 1 minute chart to see. Oh, that was not where I had put it. Yeah, so like that something, okay? So let's see what will happen now. And this is the concept of what I call a single candle mitigation. Oh, sorry guys. Yeah. So this area, right? Very important, because sometimes even if people mark this as a BOS, right, they wait for perhaps an order block to be mitigated. I don't know, is there an order block here? Like, well, in this case there is not an order block, but let's say there was order block here, for example, right, like that. Let's give it a different color, like purple. Okay, and most of the time people wait for that order block to be mitigated and then wait for a confirmation entry so that they can enter, right? But most of the time what happens, price take out some liquidity or inducement, right? And then it is not always necessary to retest or mitigate a order block or even a point of interest for that matter, because if this is your inducement, this could be also your engineered liquidity, right? Because this was your first pullback, okay? So price might even do something like this and then mitigate perhaps a wick or something like that, right? But yeah, from what I see here, putting all the confluences together, I'm convinced now that the inducement is taking out and the liquidity is taking out, everyone is stopped out, and seeing this Dragonfly Doji, I think that the price very well may go up. So I will look for short-term long positions until this area, right? Because again, the market is quite bearish, so this would be some sort of counter trend, so to say. And when price mitigates this area, I will look for entry criteria to take shorts to perhaps like this area, right? So let me mark that one also just quickly here, right? So oh yeah, there you are, buddy. Okay, so because this is now our valid lower low. Why? Because the liquidity is taking out, right? So this could be very well our lower high if price not goes up any further, you know, then yeah, this could be our lower high. But if price does go up further and mitigates something like this, perhaps here, right, like that, and then go down, okay, then this would be our valid lower high, and this our lower low, and this is our previous valid lower high, right? Because everything that happens in between this now is basically your range, right? So this here is your internal range, okay? Now let me get back, not you, you may stay, okay. Let me get this one just quickly like that. Okay, yes, right. Now let's zoom in a bit so we can actually see the action, right? So let's go here, and now, yeah, see? Now this is the power of single candle mitigation, right? So now if I go, okay, it did take out some, look, there is a lot. Okay, this is also important so to recognize, right? Because if I just quickly zoom in like that, look at this one single candle. There is a lot of volume and a lot of momentum, right? And this candle ended up being a doji, right? But look what happened here. Like, where's my mouse? There. Okay. So the liquidity of the previous candle got taken out by this wick, and look how the candle ended, right? So that's why it's important to not only analyze and plan, but also to follow live price action, because this is for me another opportunity. Let me just copy and paste that one and just go like that, you know, and put it down this candle. So there would be a 3.6 pip position, right? Now let's go back to auto and zoom out a bit, and actually I want to see it like that, right? Okay, now a little bit like that. Now let's see if this candle is also going to mitigate it immediately or not. Yeah, you see, again, and the next candle did not take out the liquidity, so let's see what will happen. Okay, look, see, the same thing happened here again. So what I'm going to do, let me also like that. So we are now 2 positions running, right? And could this be the third one? Let's just have a look. Right there. Oh, 2 pip stop loss. That's a little bit too tight, so let's make that like 2.5 pip stop loss, okay? Excuse me. Still got the cough, guys, so bear with me, please. But yeah, the reason why I am planning to enter from this candle again is basically the same concept: single candle mitigation, right? Liquidity got taken out. Now, why didn't I enter it from this wick? Because there is still liquidity down here, right? So, but in this case, the price, this candle took out the previous candle's liquidity, or sweep, however you want to call it. And because the momentum here was very high, I think that the price may continue up with, again, lots of volume and momentum from this point. Okay, so people who are waiting for this order block, so to say, to be mitigated, right? Because they are seeing this as a break of structure also, right? Okay, and they expect the price to go back here, and then, or they will take a risk entry, right? Or even perhaps wait for a confirmation entry and then go. But I think the traders who are waiting to get tapped in, I think in this scenario they can wait like forever, because there is a very high momentum. And that's why it's important at key levels. And with key levels, I do not mean like rounded numbers, you know, like 616.2 0.000. But in this case, you know, extreme point of interest areas, or like the smart money trap areas, right? If you see that liquidity is taking out, in this case the inducement, but it could have also been like your engineered liquidity, or perhaps even your external liquidity, right? But the key is look at those areas and how price reacts when it gets there, because it might have gone for the extreme one, right? But it didn't. So that's why it's important to also follow the live price action in live markets. So yeah, I'm blabbering on. Oh, sorry guys, but let's see if this position will got triggered or not. Now let's see. Oh, okay. Look, that is a lot of momentum indeed. So in this case, this position is not triggered, right? Well, it happens, but we did get twice triggered here, so I will move this position. Okay, and now let's have a look what the price will do. Candle by candle. Okay, this is looking like a range to me, but okay, let's see what will happen now. This candle, okay, this one, okay. Anybody can guess why I said Yes, that's right, because I saw something interesting. Look at here. What did happen here? Again, there was a takeout of the previous liquidity, and the candle ended up being a dragonfly doji. Okay, and that's why I am interested using the single candle mitigation for my entry like that. Okay, and you can be conservative and have like a 4 pip stop loss beneath this candle wick, but I'm pretty confident, so let's make that a perhaps 2 pip, right? And then target this area also. Okay, so let me just quickly 522, that is correct. 522, that is now also correct. Okay, now we have 1, 2 running positions. A third position was a missed opportunity, and now the 4th attempt. Let's see what will happen. Ooh, yeah, boy, it tapped us by, I believe, a pipette. It's the correct term. But let's have a look what price will do from here. Oh, yeah, I see here also this one right here, right? Let me get the drawing tool. This liquidity was taking out, but I think I am late already, because now this wick is already being mitigated. Didn't see that one. But also this one is a bit risky. Why? Because now the price is in a corrective phase. This was in your favor because there was momentum, right? This was like your first leg, and then your retracement, pullback, and your continuation, right? So it can, I believe, if I had entered from here, well, just it is what it is, right? Let's have a look. Excuse me. Yeah, that would definitely would. Oh wait, price did come back, but did not take out the liquidity. Ooh, yeah. in some way I'm glad I did not enter from that area. But look now what happened, right? Because now the price, and that's why it's also important to be patient sometimes, because this was again in a corrective move, not in a momentum move, right? But now, as you can see, the inducement here is taking out, because this was your move like that. This got broken, right? So now your inducement is taking out, okay? And I think I should have already entered from the last black candle instead of the gray. But nevertheless, let's just have a look like this. Okay, and let's do this like that. Right, and go again for the single candle mitigation, perhaps 2 pips. Let's see what will happen. Ooh, missed it just by a pip or so. Not even a pip, I believe. Okay, now let's go for the target. Yeah, there it is. Okay, auto, right? Let's zoom out a bit. Oh, not that much. Okay, so this would be also a missed opportunity. But so far we are in 3 positions, right? And let me just get this one up also like that. And this would have been, let's label those, by the way. Yeah, like that. I don't know, I didn't saw it, just have a look. Okay, so 23. This would have been a 23R position. Let's mark that one green. Okay. And this one would have been a, yeah, let's round it up to 12, right? And this one would have been like a 9R, like that. Okay, 9R. So that would have been like 25, 35. Yeah, that's like 44R profit in just during the Asian session, right? And I believe in 2 hours time or so. Let's have a look. Yeah, like 1 hour and 22 minutes time. Crazy, right? So that's the power of single candle mitigation. But again, you have to be careful. These work best at your extreme ones, right? Just like what happened here. But also around these kind of levels, right, where inducement or liquidity is sitting and people are being trapped after they got tapped out. Look for the single candle mitigation in combination with like wicks, candlestick, like pin bars, dojis, dragonfly dojis, gravestone dojis, all that. Okay, so now let me get rid of, no, not get rid of, let me go a time frame higher. Okay, so you see this wick is now being mitigated by this candle, but look at this, we have again a huge wick, right? So what you can even do using the 3-minute time frame, because on the 1-minute time frame, yeah, the wick is already being mitigated. I do apologize. Okay, so that could have been also perhaps a missed entry. But look what happened here. This directly also caught my eye. This wick here, right, rejected that area. So this would be entry type 1, as I would like to call it. And if we look here, let me just quickly get the line tool, just like that. Okay, look, this candle took out the liquidity of these candles, right? So this could be very well also now become a point of interest, so to say. Okay, just I mark it like that to keep it in mind, okay? Because I don't know what price is going to do. It may go well for the liquidity that is sitting here, right? Or sitting here. So let's just wait patiently and see what price will do, okay? Oh, yeah. So price did come back to mitigate that wick, that point of interest. And why did it come back here? Because before it moves down, and that gives me an indication that price indeed is now ready to move down, because it took out the liquidity here first, and now it mitigated and took out the liquidity of all these candles, right, to fill up the imbalance and to become efficient. Okay, so now let me zoom into that area quickly. Yes, now let me remove this. Okay, so now I can confidently say, well, I will place my sell order. Oh, yeah. Perhaps something like that. That will be like a sorry, 2 pip, but let's make it like a 2.5 pip, just to be sure. Okay, and for the target, we can use our latest lower low to target that area, like that. Okay, a potential 28R position. Okay, well, on a 3-minute it may look like this because of the big wick, but if we go back to the 1 minute, we can see we are still waiting for the entry, right? So now let's see what will happen. Ooh, yeah, price went through it, so that would have been a loss. So yeah, like that. Okay, but yeah, that's the fun part of the game. What did happen here, right? Wait, let me just do it like this. Loss is 1 hour so far, and win, well, I will say it was 44, right, so far. Okay, now let's go back to the 3-minute and put that one right there. Change the color. Okay, now back to the 1 minute. Right, so now if we just make this one quickly. Now remember, we already registered our loss, because I am going to use this one also again. Oh dearie me. Yeah, like that. Okay, now let's go back a little bit and move it up to the side like that, perhaps. Okay, yeah, or maybe even let's not get greedy, right? So let's put it on a 4 pip stop loss. Okay, now why do I, oh pardon, this was our entry here, right? So that would have been like a 2.7, but let's make it 3 just in case, right? possible 24 hour. Yeah, I can live with that. So now the same thing that happened earlier happened now to our point of interest, right? So I think I was a victim also of a kind of smart money trap, but then using the mitigation of a single candle, right? So as you can see now, this one is also swept. So now we have mitigated this, liquidity is swept, right? And perhaps you can even add like a crazy super precision entry from that mini point of interest there, but let's go just with the single candle mitigation entry, right? So now let's have a look what will happen. Okay, we got tapped in. Oh yeah, look, and there starts the volume to come in, right? Okay, now let's see. I see here some mitigation happening, and again I would consider entering from this point because we are now in an extreme area of price action, the point of interest, right? Let me go back quickly here, this week, right? So if this is your extreme high, then this is your extreme low at the moment, right? So let's just quickly return to this, and let's say I would like an entry. And you could also, by the way, you could have used the whole candle, like from bottom to top, like that, right? But yeah, during my previous backtesting this concept or strategy, I noticed that most of the time the wicks are being mitigated. So now let's make that a 2.3 pip stop loss, and now just have a look. Ooh. No, that one did not tap us in, just by a milli pip or a pipette, I believe. Let's have a look. Yeah. But you know, it is what it is, right? So this one, let's remove that one. But look, don't lose focus here, right? What happened here? We were concentrating on this area because of the liquidity sweep. We missed our entry, but don't be bothered by one missed entry, because look at what happened here, okay? Voila, okay? So this wick took out the liquidity or swept this candle, right? And we missed the entry here, right? So that's a given, but nevertheless I will mark this because the candles practically didn't close in this area, right? They just wicked through. So price may well, perhaps in the near future, come back to take out the liquidity here while mitigating this area, right? Because there is still a little bit of imbalanced area above that, right? So just to keep it in mind, okay? And now let's see what price will do very quickly, like that. Okay, goes down, and this is obviously now our change of character, this one, right? Because price topped out, right? So this is our choke or shift in market structure, reversal, change of character, whatever you want to call it. It's all the same. And now let's see Okay. Okay. Now, this part is interesting because now price may come back to this area. Look at the volume. There was no buying volume at all here, right? And because this structure broke here, let me just mark that quickly up. This was your inducement. Inducement got taken out, and then price wicked through here, right? But did not close below it. So this one could have been your short-term long, right? Take profit, stop loss beneath it, again with the single candle mitigation because the liquidity taken out here. Okay, so your entry here, stop loss here, take profits. But let's see if that will be indeed the case, yes or no. Okay, now let me move this one here. Yeah, you see? So that would have been basically also an entry, because here, right? Let me just get the drawing tool like that. And yeah, you could have probably even entered with, yeah, like that, right? If you had indeed identified this as a POI or point of interest and you're confident enough in your system, then you could have entered with like a risk sell limit order, right? But I didn't. So, and in this case, also, if you had entered with a single candle mitigation, after this point of interest got mitigated, I believe also, if you look, price just went above to tap it in, or not. No, I don't think so. So that would have been also an entry missed, like a pipette, I believe. But no shame. So yeah. By the way, let me just mark this one quickly. Where was our inducement? Oh. No, actually this one could have been seen as an inducement, but price broke below it. Yeah, I think I would see this as an inducement, although it did not close below it, because this was a bigger pullback, looking at all previous minor pullbacks, right? And although price did not close below this area, it went through it, right? Indicating that perhaps, you know, it could continue down. So now let's see what will happen. Okay, now this is also interesting, because now let me get my inducement back like that, because now this is our minor inducement, right? So let's look at it this way. It tapped here, right? Mitigated that area, and then it did create something like this, broke this low, okay? So now I am very curious if price will sweep this liquidity. Let me just mark that one out. Okay, just go slowly, candle by candle. Okay, not a lot of volume. Okay. Yeah, basically it did sweep the liquidity now, but just to be sure, let's go one candle ahead. Okay, now look what happened. This is just like a textbook entry for me, okay? Because now your inducement liquidity is taking out and the price never closed, or the candle never closed above this area, okay? And third, look at the last candle. It's a gravestone doji, right? So all the signals or confluences telling me to short. So what I am going to do now is, let me get me my shorts tool position like that, and let's put our entry on the candle wick like that, and perhaps, well, let's go crazy. Let's make it a 3 pip stop loss like that. Okay, fingers crossed. Let's see what happened. Okay, so we are now tapped in, and from the looks of it, yeah, volume and momentum is again introduced by sellers. Yeah. I'm just looking at this area now. Okay, this candlestick here, it could be also an area to keep an eye on. The wick, let me mark him first quickly like that. Okay, so these are all not liquidated, but this one is, and the one below also, but this one is also not liquidated. So these are areas to look out for, because price may as well bounce off from them. But yeah, just let's see what will happen next. Excuse me. Okay, now what happens? This is interesting also, because let me move that one to there, and just quickly like that. Now you see here, this one would be also a single candle mitigation entry, and let's make that a 3.5 pip stop loss just above these, right? A bit risky because it's an equal high liquidity, but my focus lies momentarily on this here, right? Because yeah, price may go up, but I am willing to take a calculated loss if that happens, because I will directly re-enter if I get the same situation as this happening here. Okay, so to me it's fine, and I am willing to take that risk. And now let's see what will happen, because now the liquidity is swept from this candle and this candle. It did kind of mitigated this point of interest, so to say, right? So I'm confident. Yeah, I'm confident enough to take a position here. So let's see what will happen. Okay, we got triggered, and then price did come back a bit. Okay, yeah, did come back now, right? So let's see. Right, so this one did now get mitigated altogether. If you look at this, right? So the blue GAN toolbox shows that it did fully get mitigated now, right? Okay, so let's zoom out a bit like that. Okay, and now why does it Yeah, man, I want to see it like that. Okay, so now we got tapped, and then price did a little bit sideways action, and then no, that one not also. Okay, this one could be interesting, I'd say, but there is a lot of imbalance still above. So for the time being, let's just wait what price is going to do, right? Now let me just zoom out a bit like that. Okay. By the way, let me remove this one. Not something worth to put our focus on. Okay. And then let's move on. Okay, that is interesting. I see a couple of wicks. Is it worth? Well, I have my doubts because look, it looks like volatility is building up, right? So yes, it might work, but it might also not work. Wait a minute, guys. What do I spot there? Just here. Okay, yeah. Could be interesting, but no. I was looking at this. Let me show you guys quickly, right? Yeah, maybe I should use the pencil tool like that. Okay, that one is taking out, and not that alone. Look at the candle here, being a doji candle. So I think I could have entered also from that area, but you know, let's see. Okay, so and if we focus now on this, that one is taking out, but no. I do apologize, guys. I have a dry throat. Okay. Yeah. Price tends to go. You see, now there's a lot of going back and forth. I don't like that. Even though I see here like a liquidity sweep of the previous candle, right? I don't know if I am willing to take a position from there, because yeah, price goes a bit like that. So sometimes it's better to sit out and wait instead of making impulsive decisions based on FOMO and not worth the risk, right? So now let's just have a quick look what will happen here. Okay. I think Now let me just go to the 3-minute time frame just to have a quick peek. Okay, so that one, here was the liquidity swept. this candle got mitigated, or the wick, by this one, right? And the same goes for this candle here. Liquidity taken out, got mitigated multiple times. So I think if I had used the 3-minute time frame also, I could have entered from like this area for this candle, the current candle, but yeah, just did not happen. So I can cry about it, but not worth my time and energy, right? I'm just keeping my just keeping my focus on the important things. Okay, so now we have 1, 2, 3 positions running. Okay, and now let's look for another position if we can get one. Yeah. Okay, so obviously, yeah, this one was definitely a missed opportunity, because now, from the looks of it, momentum is again kicking in. Okay, and from this point on, I even think, you know, what happens there? Nah. Okay, just let me just quickly forward that to our take profit target, because from this point on, look, okay, our take profit target got hit. Now let me just put that one like that, and let's see what our profits are for these. So this will be like 24, something like that, right? 24, and this one being 18, 19, because if we count the 0.37 along the 0.73, right? So just round it up to 19, and this one would have been like a 12R, right? Okay, so that's 12R. All right, so now remember, we still have one loss, right? Even though it isn't on the chart because it was so close to each other, I didn't want to like overlap things. I like to keep my charts clear. So now if we count these, let me just get me my calculator. I'm very bad bad with so that's like 44 plus 24 plus 19 plus 12. Okay, so far our profit is like 99R, right? Okay, and yeah, now things are also getting interesting, because you see this. Let me just quickly remember our most recent lower low in our structure. Now price came and wicked through. Okay, so in this case, I would be very interested in buys, right? And perhaps I don't have to target like this area, but for the short term, because remember again, our high time frame buys is still bearish, right? So I think perhaps I could look this as my take profit target, because again of the liquidity sweep of this candle and the wick, same when we marked this point of interest, right? And if we look here, I see here also one. So let me just quickly pull that one up there, like that. Okay, and yeah, I think this one is way too far, like that one, remember? So it all comes down to what your approach is, what your appetite is. But I think if I have to choose from these two, there is like a lot of liquidity sitting also here. Okay, we have a clear imbalanced area here. Yeah, I think I go with this one as my take profit target. Okay, this right here. So now again, using the single candle mitigation, because you are now in an extreme zone, you just liquidated the external range or your external liquidity, and it wicked through. So same principle. If I just put my order like that, and let's make that 4 pip stop loss and target here, right? Like that. Okay. Now let's see what happens. Oh, I must go one to the left. Did we get triggered in? I can see. Yeah, now definitely. Okay, so yeah, we definitely did get triggered. And in this case, I would even consider a re-entry, but for this example's sake, I leave it like that. Okay. Yeah, so a lot of momentum is introduced. Okay. Okay. I am looking for interesting things, but so far I cannot find anything. Whoa. Okay. Being sick sucks, man. Okay. Wow. Yeah, that's like a big wig. Okay. Right. From the looks of it, price may come down, but okay. That's okay. Yeah. Buying volume is coming back. Yeah. Okay. Now, this is very interesting. Why? Because if you look at this now, this would be your inducement, right? Inducement below, and some people would see this now, and that's why I'm glad I waited to mark this as my take profit target, because now when I look at it, seeing this, you know, market created inducement after, right? It took out now this price here, okay, and this right here. Oh, let me get the right tool. This right here might be as well as a smart money trap. Let me give it a red color, okay, and let me mark that one as SMT, smart money trap. And why do I think this is a smart money trap? Because we have retested our external liquidity, right, but never closed below it, and all the liquidity that took out the previous lowest low, right, got also liquidated. And now look at this movement here, right? So buying pressure is being introduced, right? And this being your movement again, like that. Okay, so I think that price will tap in the smart money trap, right? And then come down a bit to take out the inducement here. So everyone who enters short from this area will be happy to see the price go down. But personally, I think after the inducement is taken out, that it may go well higher to fill up the imbalanced area here. So like that, to create market efficiency, right? And from there, perhaps it can go even higher, or it can give a reaction, right, and mitigate again, just like it did here, and then push lower, create some inducement there, right, take it out and move lower and lower. But we are not anticipating, but we are reacting, right, using the live price action. Just my view at the current moment. So let's see what will happen, right? Okay, yeah, so now had you entered from here with your stop loss there, right? You could have targeted perhaps this here. Okay, but again, I think, well, looking at the current situation, the inducement will be taken out and then like that move to the upside. But I can be mistaken, of course, but we will see. Okay, now, yeah, will it go up again? Okay, I see a lot of selling pressure. Yeah, look, you see what happens? Not only the inducement got taken out, like minimal, but if you look closer, there is here like a point of interest, right? So that one is also mitigated. Now let's have a look at the next candle. Yeah, this would be definitely my next entry for a long, right? So now I'm confident enough to place a single candle mitigation entry like that, right? Something like that. Let's make it a 3.5 pip stop loss just beneath the current candle. Okay, and then let's see what happens. Yeah, so from this point on we got triggered, and now yeah, let's see what the price is. Wow, okay. Right, ding ding alerts, entry alerts, because let's go here. And why do I consider again a single candle mitigation entry? Because it all happens at the extreme areas, right? The extreme area here, and then inducement was created. Now it got taken out. Remember earlier where it happened also with the smart money trap, and now in this case it happens after the inducement is taken out, and there is a retest of like perhaps this point of interest, right? Or the block, however you want to call it. But let's go here and copy paste. Okay, and then I will enter like that something, right? 3.5 pips. And again, this here, this candle, right? Like that. Okay, so the liquidity got swept, and the candle ended up being a pin bar, Dragonfly, Doji, Hammer, whatever you want to call it, doesn't matter, as long as you can identify it and how you can utilize it. That's important. Okay, now let's see if we getting triggered or not. Yeah, definitely. Okay, now the price again is going up. Okay, immediately the same thing happens here again, like it happened here, right? So again, same song over and over again, right? So here the liquidity got taken out, okay, and now I am going to enter like this, okay. 2 pip stop loss, that's very tight. Let's make it a 2.5 just to give it a little breather, and let's extend this one like that and this one like that, okay. And of course your target would be again the same as your previous 1, 2, 3 running positions, right? Because I think now the price will continue up, take out all the induced or manipulated sellers here, and then probably go for the imbalance area here, but we will see, right? Yeah, position again got triggered, you know, and I think we can do the same here, but looking at the last candle, a lot of momentum. I don't think that price will come down back to mitigate the wick. Nah, I don't think so. So let's just have a look. Oh, maybe it will. Nope, it went higher, and oh yeah, of course, yeah, and that's our take profit target hit. All right, so now let's look at the profits of these trades. Let me just copy that one like that. So this is a 14R, okay, and this one being a 15R. 15, okay, and this one is a 13R, like that. And the last one, let's round that one up also to a 13R. Okay, so now these one were already implemented in the current wins, right? So now we have to calculate the rest. So let me get my calculator again. So that will be 99 plus 14 plus 15 plus 13, and the last one plus 13, right? So that is 154 R win and 1 R loss, okay? And that's all done in just during the Asian session, using the 1 minute time frame and your structure and your inducement liquidity, and of course your single candle mitigation concept for your entry criteria, because most of the time people are waiting for an order block to be mitigated, but how many times does it happen? In this case, perhaps it did, but most of the times your refined order blocks do not get mitigated. Sometimes they do, sometimes they don't. However, if that's the way you trade, fine, as long it gives you consistent and consistent results and profits, right? And that's the most important thing. But yeah, like I did my entries on the single candle mitigation, using all the confluences together. Not many people teach you to trade like that, right? So yes, it takes some time to practice, because again, you have to be looking at specific areas, right? But once you have adjusted your eyes to that, you can find these entries just the way like I did now during my back testing. So I hope you guys enjoyed this video and learned a thing or two, and I will definitely make more videos in the future. For now, I wish everyone a very blessed Sunday, and I will catch you in the next video. Okay, take care, family. One love.